Indemnity versus warranty versus guarantee. They may look like similar terminologies or might be confused for each other. So this video is to differentiate the clear clarification between them. So what is the core purpose of these classes? So indemnity is a promise to compensate for a loss or damage. It usually operates regardless of breach under the contracts. Warranty is the representation about the quality or standard of a work or the material delivered. The breach gives rise to the claim for damages, not directly to the termination. Guarantee. It is a third-party commitment to answer for any default of one party under the contract. It is commonly offered by a parent company or banks, usually. So what are the obligations under these classes? First is indemnity. Indemnity doesn't depend on a breach of contract. It can be invoked even if the contract is otherwise performed. Warranty applies to the materials, workmanship, design, or any compliances with the codes. It can be expressed or implied by law or practice. Guarantee, typically a guarantor has to be involved. It might be a surety company or banks or any guarantor or financial guarantee provider should be there. They are not usually involved in the execution, but backs the obligations of the party, not just the contractor, usually the contractor. What is the scope and coverage? Indemnity is used to shift a specific risk from one party to another. In contracts, usually it will be both the sides. It is common in third-party claims or environmental liabilities. Warranty, it is generally for a fixed period. Usually it is 12 to 24 months connected with the defect liability periods. In construction, we usually call that as a DLP. Warranty usually refers to the sub orders or sub works delivered by the subcontractors or the vendors. They have their own warranties, and that will be transferred to the owner by the contractor. But the large umbrella will be the DLP, because usually the other manufacturers may provide 2 years warranty, but after installation and after handing over only the contractor's warranty will start. So the larger umbrella is the contractor's warranty. So guarantee, if we see that two types of guarantees like performance guarantee, advance payment guarantee, they are very usual. So performance guarantee ensures the work is completed. Advance payment guarantee is to secure the repayment of the advance that was received by the contractor at the time of mobilization or to start the contract. What are the triggering events? In indemnity, often it covers losses, claims, damages, and costs and expenses, usually by the third party. It can be limited. Usually, it will be uncapped because this damage is unknown. It is not within the range of the contract, or it's not within the liability of the contract, like the liquidated damages or consequential damages. Warranty is limited to the repair, replacement, or monetary damages. So it is always it is limited to the triggering events which are within the contract. It does not entitle the buyer to terminate the contract. There is no termination trigger in terms of warranty. For guarantee, the activated when the contractor defaults or fails to perform. It requires notice of default to the guarantor. Proof and the claim process. So indemnity is commonly used for injury to third parties or property damages. So typically found in subcontractor obligations. It's also in the main contractor obligations. Warranty, it requires showing that the work failed the promised standards. No need to prove the actual damages to claim breach because there wasn't workmanship and the workmanship has failed. That's enough for the claim process and it has to be rectified. In terms of guarantee, financial guarantees cover payment obligations. Performance guarantees assures delivery of the scope. So if there is a default by the contractor in the performance guarantee can be invoked by the employer. So that is a protection the employer has in terms of breach and immediate relief to cover himself from the contract. Performance and fault. So indemnity is usually triggered by occurrence of specific loss, not necessarily a breach. It is not connected with direct breach under the contract. It is an injury caused by subcontractors' negligence. So even any negligence it caused, the entire loss has to be compensated. Warranty is forward-looking performance standard assurance, does not cover external interference or force majeure issues. Yes, if something damaged by force majeure, it will not be covered under warranty. Guarantees on-demand guarantee are payable on claim. That is no proof of breach. Conditional guarantees require establishing the breach first. So usually that's why they don't go with the conditional guarantees in construction contracts. They always go with the unconditional bank guarantees. So whenever there is the employer feels that's a breach, it doesn't have to prove the breach. They can just invoke the bank guarantee. Remedies and enforcements. So indemnity entitles the indemnified party for the monetary compensation which is claimed by the third party. So remedies may extend to legal costs and consequential losses also. So in warranty, contractor is liable to rectify the defective works during the DLP, may be asked to reperform defective services, and there might be, when coming to defects, there are different types of defects like latent defects and patent defects. So each has their own kind of remedies. When coming to bank guarantees are independent contracts. Bank guarantee itself is a contract. That's why you should not always be cautious about the expiry of the bank guarantees. If the bank guarantee expires, the contract expires. Enforcement does not require proving underlying contract breach if it is an unconditional bank guarantee, which is the most common bank guarantee in construction contracts. Limitations and risk boundaries. Indemnity is often supported by liability insurance because when you don't know the size of the loss, it's better to get covered by the insurance. It may be a contractual requirement to maintain such insurance. Yes, some contracts have the insurances requirements. Warranty may include wear and tear, improper use, or third-party damages. So those will not be covered under warranty. Must be clearly stated in the warranty clause. Usually they forget to write such things in the warranty clause. Coming to guarantees and limitations, guarantees often have a defined validity period and amount. That's what we said. The bank guarantees always have an expiry. So must be monitored to avoid expiration risk. If bank guarantee is expired, there is a default by the contractor, the employer is not getting covered. If you go to the banks say that the bank guarantee has been expired and we cannot support. Duration and survival. Indemnity is one of the most important survival clause that survives termination. And survival period should be clearly stated in the contract. Warranty in some jurisdiction, warranty coexists with legal obligations, even though the contracts give minimum warranty period. But if the jurisdiction or the legal covering is larger than that, then always the larger umbrella plays because the legal obligations are always higher than the contractual obligations. So examples includes building codes or consumer protection laws. Guarantees, it is discharged upon completion of the obligations. If the advance is recovered, the advance bank guarantee has to be released. And if the retention period has been completed or the DLP has been completed, the performance bank guarantee has to be released. Some require formal return or release from the employer. That procedures will be in the contract and it has to be followed. Thanks for watching. And if you want to know any specific topics that has to be explained, please comment. We will discuss on that. Thank you.